Palantir stock has not had a great 2021. It's down 15% year to date, but if you fell for all the other YouTubers' hype videos when it was near the top and you bought in at that point just a couple of months ago, you'd be down around 50%. But listen, it's okay. All hope is not lost. You may just need to have a super long time frame for this to actually catch up to its valuations, which we'll talk about in this video. And if you've been following my channel for a little while, you know that I have been extremely vocal about my stance with Palantir. And if you're new here, let me just sum it up in a sentence. I really like the business. I do not like the valuation on the stock. So when this was at like the $40 range, I looked like an absolute fool because I was like, be careful with this. This is overvalued. I don't know how much higher it's going to go. And it kept going higher. And then we came down to the 30s. I still looked like a fool, not as big of a fool, still like a fool. And I was like, I still think this is way too expensive. And then we came into the 20s. I still had the same people commenting, you got to buy in ASAP because this is cheap. And I'm like, I don't know. I'm looking at the numbers and I don't think it's cheap. Maybe I'm still a fool, but I'm not buying. And now we're under $20. We're in the teens. Maybe I still look like a fool, but what I've noticed is that people are starting to come around to my analysis here, and they're starting to see, the different perspective that I was looking at, which is like, great company, overvalued stock. I'll say this, now that we're in the teens, we're looking a lot more attractive. Still think it's kind of expensive right here in like the $19 range, but we'll talk more about that in this video. So I'm going to share a lot of data with you in this video. Sit back, relax. You're going to get some good info in here. I'm going to share some of my analysis as well and where I see the stock, what valuation I would actually be interested in buying the stock at. And of course, we're going to talk about some time sensitive info with this earnings report that you need to be paying attention to. So guys, if you appreciate me speaking my mind, going against the grain here on YouTube, being an unpopular YouTuber when it comes to Palantir, when everyone else is like, oh, you gotta buy this stock ASAP, hit the like button, show me your support, I appreciate it. Okay, so in this video, I'm not really gonna speak about the business per se. We can both agree this is a great company. They're doing unique things. They're in spaces that other companies can just dream of. They're probably never going to get there. And they have incredible technology. No one's disputing that. That is something we agree on. But that aside, let's talk numbers. On May 11th, Palantir is expected to report their earnings. And what we're expected to see is 4 cents in EPS. So it's profitable, it's supposed to be. And revenue is expected to come in at $332 million for the quarter. This would put them on track to seeing over a 33% revenue growth year over year for the company. Now, here's the thing. In the last few weeks, like the last, I'd say month to 2 months, the SaaS space, software as a service, cloud-related stocks, big data analytics stocks, stocks like Palantir have not had a good time. Now, this is not a Palantir-specific issue. However, it has been hit harder than a lot of the other companies. I have spent a good amount of time understanding this space, looking at businesses that Palantir competes with in a sense, but not really. And I personally have a position in one of these big data analytics companies, which is Splunk. Now, last week, another player in the space, Datadog, reported their earnings, and they saw revenues grow 51% year over year, which is absolutely incredible growth. And they also beat on EPS here as well. Then they put out their guidance, and revenue growth is expected to surpass analyst expectations for Q2. And the company also raised their outlook for the full year 2021, which again beat estimates. This is a really good sign. And if you are invested in Palantir or you're following Palantir, you need to follow other companies like Splunk, like Datadog, like Elastic. There's a lot of other companies like this. Snowflake is another one. Because you want to see what the sentiment, what the spending, what the overall picture is like for this sector. From Datadog's report, it tells me enterprise spending is still extremely strong. They still see extremely strong demand going forward. And despite the stocks taking a nosedive in recent weeks, the companies are still chugging along. The fundamentals are getting stronger than ever before. So now let's look at the fundamentals for Palantir to put things into perspective. Now, when I did this last, Palantir was at just about a $40 billion market cap. So, numbers have come down a little bit, which means valuations look a little bit more attractive. Today, we're sitting at around a $36.8 billion market cap for Palantir. Again, it's come down a little bit from 40, but it's not that drastic. If I update my projections here, this puts Palantir at a 25 forward price to sales for 2021. And based on what I look for in my investments, it would only get to a forward price to sales in the range of around a 10 by 2024. So in other words, if I buy Palantir stock today with the metrics that we have today at the market cap that it's at today, I'm paying 4 years out in advance for a reasonable valuation in my mind. And to calculate kind of where I see their revenues growing to, I just use a screenshot taken directly from Palantir themselves, who predicts that revenue should be around $4 billion by 2025. Some people are saying they're sandbagging this number of 4 billion. All I'm going to say is that's what the company provided as their outlook, so I'm going to go on that. There's no other proper source of information. You can see what analysts think, you can see what YouTubers think, you can see what average Joe thinks, but the company knows their business the best, and they're projecting $4 billion by 2025. So when I model things out, this means that from today, they'll be growing at roughly 30% year over year up until 2025. 30% is good, but then you have other companies like Datadog growing at 50% plus. So Palantir may not be the most attractive stock in this space, just saying. So now with earnings coming up, does it make sense to buy into the stock now ASAP? Or is it better to kind of just wait for the earnings, see what they say, and then consider going in? One strategy is you could sell some puts here on this cash secured puts and collect a nice premium because the volatility on the stock is extremely high. So you can collect that, get a nice discount if the stock does go down after earnings. And I might do that, we'll see. But am I going to buy the stock directly here before earnings? No, I'm not. I'm okay paying, 1 year out, 2 years at most in advance for a good business at valuations I think make sense in 2 years. But when I see something like Palantir and I can only justify the valuation 4 years out, not interested. I can put my money in other places and return much better gains in that 4 years than having it sit in Palantir. But now, based on the information we know from Datadog, I think Palantir is going to have a really strong quarter. I think they're probably going to beat on EPS, they're probably going to beat on revenue, they're probably going to beat on guidance. It's going to be a triple beat most likely, which means there should be some positive sentiment coming into this stock, which means it could see a nice gap up the day after they report. I definitely think that's a very realistic possibility. However, if for whatever reason there's a miss on any of these metrics, there could be quite a significant sell-off in this stock, so just be careful. The question, of course, is will a strong earnings be enough to get Palantir out of this rut? I don't know. I think maybe short term, yes, but there's a whole shift going on right now in the stock market, and Palantir is unfortunately on the wrong side of that. It's not just Palantir. It's not just Palantir. I'm not hating on this. Other stocks I own, like Splunk, is also on the wrong side of this. SaaS stocks, cloud stocks, high growth stocks, they're not in favor right now, and that's just the way of the market. So even if Palantir reports strong numbers, good chance that it could gap up, but then sell off throughout the day. There's just a lot of headwinds right now when it comes to these kind of stocks. So instead of fighting the grain, I'm going to probably just kind of sit on the sidelines, wait for things to kind of level off a little bit, maybe nibble in on companies I think are super undervalued. Splunk is super undervalued, guys. But when it comes to these high flyers, high valuation businesses like Palantir, it's just not worth the risk to reward right now. So what can we do in the meantime? Well, we can wait. Eventually, over the very long term, there's a good possibility that Palantir is going to be worth much more than it is today. This could be $50 to $100 billion plus market cap in the future. However, that future could be realized only from 5 to 10 years from now, maybe more. So you got to ask yourself, does it make sense to have your money locked up in this stock for that whole period of time when there's other investments that could make you a lot more money during that time and not have your capital tied up? When stocks go out of favor, it takes a little bit of time for things to turn and sentiment to shift once again and stocks start moving higher once again. And this is just speaking from experience. I've seen this happen time and time again with, the best of the best stocks in the stock market. It's not just related to smaller cap companies. So I just want to share that with you guys. That's just my experience. So anyways, on the conference call, guys, for Palantir, this is what you want to listen for. Firstly, you want to listen to their existing customers. You want to see if the spending for those customers is still strong, whether those customers are actually increasing the amount they spend with Palantir. That is extremely important to, justify the fact that this is such a great product. They just want to spend more with the company to save even more themselves in other aspects. The second thing you want to hear for is pipeline for new deals. You want to hear if they have some big potential deals coming. That could be a huge catalyst to move this higher. You want to hear their gross margins. You want to make sure that they're maintaining at least 70% in this. It is a highly profitable business over time, but that'll only happen if their gross margins remain high as well. So that's something you want to watch for. And then finally, you want to hear any statements on free cash flow going positive. So right now in this market, free cash flow is important. Investors are looking at that, and businesses that have high free cash flow are doing well. Businesses that have negative or very low free cash flow, not doing so well. And Palantir thus far is burning a ton of cash. They are not free cash flow positive, but this will change over time if they maintain those high margins. So if there's any sort of outlook on free cash flow going positive next year or the year after, it would probably give a little bit more confidence to investors. The bottom line is that investors just need reassurance that the business is still doing well. Despite what the stock is doing, you want to hear that the company is chugging along, they're growing, the fundamentals are getting stronger, and that just means the stock becomes more and more attractive. Think of it this way, okay? You have the fundamentals, you have the stock price. The stock price shot up all the way, fundamentals were still down here. Now what we have happening is stock dropping, but fundamentals also increasing, and then eventually it makes sense to buy because it's a fairly valued company, or you have the stock price drop lower, fundamentals get stronger, and it's an undervalued company. So that's kind of how you should look at this. Don't just base it on hype, on emotions, on what everyone else says. Do your own due diligence, be logical on this, and over time, you can make a lot of money in the stock market. Anyways, guys, if you're holding Palantir stock, wish you all the best on this earnings report. I hope it moves up. I have no skin in the game here as of recording this video. Maybe that changes on Monday, we'll see. But anyways, thank you so much for watching. Don't forget to invest positively. I'll see you in the next one. Peace.